Welcome to Bar Charts Market and Close. I'm your host, John Rowland, Bar Charts Senior Market Strategist. Classical conditioning by the dip. And like all trading ideas, they work until they don't. How would you describe a bubble? Would it be a stock that is up 4,600% year to date and had a net loss of $200 million? Would that classify as a bubble? Thomas is concerned about Bitcoin, and I'll try to talk him off the ledge. I'm going to share some two trades with you today. One is a bull trade, and one is a bear trade that I've recently put on, and all that plus your questions. And to help me, as usual, Twitter Tom and R Mr. X. Hello, Thomas.
Hello, John. How are you?
A lot of options expired today or near expiration, so it was kind of busy. Not that busy, just a little bit busy.
It's been an interesting week. It's had some ups, it's had some downs. A little more interest, and let's say people a little bit perking up with some interest, I think, compared to the past weeks.
It certainly feels like volatility is back into play, doesn't it?
It certainly does, and we have an absolute jam-packed show, huge variety of topics, so hopefully we'll make a lot of people happy covering some different areas of the market. Before we do that, I just want to give everybody a quick reminder. If you're watching directly on our website, you want to ask a question, just click Ask a Question at the top right. You'll see it in the orange color. And if you're watching on our various social media channels, just go ahead and leave those questions in the chat or in the comments, and John and I will get to as many as possible. All right, John. There has been a trend that I've been tracking in the S&P 500, and that, of course, is the fact that the SPX is trading, or rather has closed above its 50-day moving average for now 117 consecutive trading days. Looks like it might be 118 after today. John, this is the third longest such streak going back to 1990. Only 1995 and 2007 were longer. And it's funny, John, because this morning, very early on in pre-market, it looked like this could be in danger. It's since recovered. But John, here's a question. Do you think it could fall below the 50-day? And if it does, what do we do?
Well, I don't think it's a question of do I think or could it or woulda. I think it's just more about risk management. So, pull up my chart there, would you, Thomas? So, which is kind of funny, just before we get started is, I left up this black line. This is our V-bottom projection. Remember I said to you that what we could see is that we kind of would flounder around the line for a while. It is, Thomas, look, it's amazing that, we predicted this line months ago, and how many highs and lows it has captured over the last, month or so. But now, what do we have here? Well, we kind of have, I also said that, don't be surprised if you see a correction. Now, we did see this one big red candle, where the S&P fell like, I think it was 2.7%. Now, I don't deem that as a correction, but some might, right? But, what I want to talk about here, Thomas, is that, this kind of market behavior, right, by the dip, and certainly retailers have been doing that. Retail traders have been doing it. And this kind of comes under that behavioral finance of recency bias and outcome bias, and this kind of reinforcing this idea of buying the dip. So you had an interesting fact, right?
Yeah, this has been something, John, we've talked about this, it feels like quite a few times this year. But recently, two statistics have come across my desk. So, we talked about the fact that in September, retail bought, I believe it was about 100 billion worth of stocks, John. That is the largest 1 month buy ever for the retail trading community. And then last Friday, You guys remember last Friday was not a good day for the market. Well, who stepped up again, John? It was retail again. That was the largest single day buy in about 6 months. So retail appears to have high conviction in this market, John. But then the question is their conviction a little too high, does it seem?
Well, yeah, I mean, how much more leverage do they have, so to speak, right? So pull my chart back up there, would you please? Um, yeah, so now what has happened is that we have a lot of new length that has been purchased in a very short period of time, which is kind of represented by this pink box, right? And you notice how that the 50-day moving average, which is our blue line, is acting as a level of support. That is usually a good sign in a market, and certainly we see the market has responded as well today. But this now also becomes a point of risk. In other words, some traders who, typically retail traders and even some institutional traders might have stops or might decide that they don't want to be in a position if price breaks below the 50-day moving average. Now, algorithms are well aware of this phenomena, and a lot of times what they do is they try to force the market below one of these values to what is called a liquidity trap and try to set off those stops. I mean, who hasn't had that happen to them? And the market reverses very quickly, which could have been what has happened today. But the question I have is, how much of this new length is leverage? In other words, on margin, and how strong a conviction do our buy and dip traders have? Because if it doesn't hold the 50-day moving average, then we're going to get a change in character, and the change in character of trend. In other words, higher highs and higher lows is supportive of this buy the dip behavior. But if we break the 50-day moving average, then we're going to start making a lower high, and then below the 50-day would be a new lower low. So a weekly close below the 50-day moving average, I believe, could be that signal that could change the way, the behavior of the market. And that could create a liquidity sweep to the downside. In other words, a lot of this leveraged new length, would be liquidated. Now, if we do get that, well, then, for the S&P, for the SPY here, I think that brings in the 200-day moving average. I know that there's a little line here around 635, which is the 100-day moving average. But I think it'll bring the 200-day into play, which is around 605. And if you're looking on the S&P index itself, that would be around 65, 52-ish. And there's a little gap just below there around 64.75. Now, what was interesting, I did a little bit of investigation into some gamma exposure on the end of the month, October options, and there's a large cluster right around the 650 level in the SPY, which kind of corresponds with our 50-day moving average. And there's another cluster right around 660. So that could get the balls rolling as we get into that last week of October. But until then, brother, for now, everything looks okay and it's full steam ahead, right? Retail traders to the rescue.
Yeah, and John, I don't remember the exact details of this, but a few months ago, I read that this year has been one of the best years ever for buy the dip. Meaning, when you see a red day, you buy it, and then the next day, magically, the market just seems to go up automatically. When that starts to change, then you start to see what people are made of, and you start to see whether their conviction is going to hold or if they're going to panic, dump, and then that's when you start to see some additional pressure in the market.
No, certainly if we look at this chart here, I think we have two values that we can really focus on. Our V-bottom target level, how important that seems to be playing out, and right there around the 50-day moving average.
All right. So, John, there's been some talk about whether the overall stock market is in a bubble. And I don't think the overall market necessarily is, John, but I think we're starting to see some sort of micro bubbles, right? Some smaller bubbles forming within the market, certain areas. And we talked about this yesterday. The one that comes immediately to mind is quantum computing stocks. Now, this area of the market has been all the rage. I look at some of the price action in these stocks, and my head is just going crazy because I just can't believe what we're seeing. And I was curious, so I asked their audience on X whether this area is in fact in a bubble. 74%, John, said yes, they believe quantum computing is in a bubble. We've talked about a few of these stocks before, John, but what are your thoughts? Do you feel like quantum computing is in a bubble?
Well, I certainly, if we look at the evidence, and again, let me pull up my page here. This is our quantum computing stock under our investing page, and I've sorted these by 52-week percentage. You got the three top ones that everybody is talking about. Up 2,000, 3,000, 4,000%. I mean, I guess that is what you could call that is a bubble. If you look at the fundamentals of the market, and again, fundamentals sometimes don't mean anything, but for instance, for Getty, they only made $11 million last year, and that stock is up what 4,600, 4,900%. They had a net loss of $200 million last year. D-Wave only made $22 million, and they had a net loss of $167 million. And Ion Q, which was a stock that we identified over a year ago, that one is done pretty well. I think it's about 400%. But again, they only make about $50 million in revenues, and they've lost 170. So all three of these companies have a big cash burn. And the realization is that their products or what they're going to bring to the market are years away from profitability. And certainly the development on a scalable basis might even be a decade away. So if you ask me, are these stocks in a bubble? Yeah, I think this could definitely be a bubble, especially if you look at their price behavior. Again, this is IonQ. On Monday, I think that was Monday, where we had that big up day after the down red day on Friday. This stock was up 16%. But since then, look at this, down 5%, 6%, 9%, 2%. I mean, that kind of volatility is bubblicious. And I think right now it's about off 25% off of its high. So yeah, Tom. So I think this is definitely a bubble, but it's not only just quantum, right? I mean, look at, let's say, rare earth. This is LAC, which is a stock that I own in my portfolio, and this is the one that's been in the headlines with the government investing. It had two big days, right? I mean, some stocks take a whole year to go up 19%. This one went up 12% and then 19%, and then within 3 days it gave it all back, right? And again, another stock that is now something like 35% off of its most recent high. So I don't think it's just quantum. I think it's rare earths, it's batteries, Wi-Fi, drones. I mean, you can add a whole long list of these different micro sectors, as you say.
What's funny, John, is I saw recently a forecast from Bank of America where last year they thought quantum computing was going to be worth 300 million in 5 years. And they updated their forecast where they now say it's going to be worth 4 billion in 5 years. Here's the problem. IonQ by itself is worth 19 billion. So somebody do the math. Somebody do the math for me on that one.
That's like when they kind of like, the analyst says, oh, we've raised our price target on our stock to $50 and it's already trading $75. Like, oh, gee, thanks, right? But I think the takeaway from this one is, Thomas, is that, a trade is only worth what you get when you get out, right? And that, you got to rig the register every once in a while. Cha-ching, right? Cha-ching. And the greatest sin of trading and investing is letting a winner turn into a loser. So, risk management is paramount. So when you get one of these stocks, that if you're getting, 10x or whatever, think about things like covered calls and buying put protection, partial position reduction. Selling just a small portion could cover your initial investment. Think about that. Then you don't care about this bubblish or these wild volatility springs because you basically own the shares that you have left free and clear, and that everything from there is gravy. So I think it's more about understanding risk management, not really are these bubbles or not bubbles.
Yeah, well said. All right, so let's move to crypto, John, specifically Bitcoin. Price action, to say the least, is not very good. And I've been bullish on crypto for 3 years. I'm still bullish today. However, I have to be honest and say that my conviction has been tested. I'm not as convinced that we are going to go higher. I still think the odds are in that favor, but I do want to point out to people who've been following us for a while, hey, this is an area to be careful, to be concerned with. It's just been red day after red day for crypto, which is it's interesting, John, because you look at gold, you look at precious metals, you look at stocks. It's just the opposite. It's basically the opposite of what Bitcoin is doing. That worries me. What happened last cycle, John, and this, I just want to point this out to give people sort of something to look for, and that is Bitcoin's 50-week moving average. So for those of you who want to track that, you can just switch to the weekly chart, and then you can just put in the moving averages of 50 to see where it is. It's coming in about the $100,000 to the $102,000 level, John. So that's an area that I'm watching. So why am I watching that? Well, the last cycle, when Bitcoin had 2 weekly closes below the 50-week moving average, that marked the end of that cycle, and Bitcoin then fell into a bear market. So, John, if we see that happen again, if we get 1, if we get 2, I'm probably going to wave the white flag and acknowledge, hey, it's probably over, guys, and I'll see you back in a year or 2 years or wherever it is. John, do you feel the same, or do you have more encouraging news for us?
Well, let's see if we can digest this a little bit. So one of those chart patterns I like to see is these cascading sell-offs, and certainly you can see over the last 4 days, certainly cascading sell-off, but certainly maybe as much as the last 7 days. Sometimes I call this a 3-candle drop, and usually the last body or the last candle, I don't really care about the body. I really want to see more of just the range. But what we need is the cascading to stop and then a green candle to be created. Now, what I thought was going to happen today, the way the market fell off, that we were going to get that, right? So, I could also give, let's say, a doji, right? So we're kind of doji-ish here on this most recent candle, but maybe this is the last leg, that last part of that cascading sell-off. And what we need is a new green candle come Monday. And then once that closes green, then once the price gets above the close of that candle, then that would be your buy signal. So that's what encouragement that I want to tell you to look for. The other thing I like about the price action here is, again, we broke through a very significant level of support. You can see by this, this combination of these two pink boxes here, a recent low that was reactive to this low, and this low was a reaction to this breakout. So, that was encouraging, but, it did wipe out what maybe might have been some liquidation, but it did hold the 200-day moving average, which I think is a very constructive sign. So as long as we hold above there, Thomas, I think your number was 101. I think for me it would be 103, 400, 600, 700 in that area. But we also have to be realistic here, right? Price action has changed, and this controlling what looks like a dragonfly candle would put us resistance at around the 15,696 area. But I want to show you that this red line here, the 200-day, is that house markets sometimes likes to move between controlling candles. And so look here's another doji dragonfly, which at this point, all of this price action is the controlling candle that has kept this market up. So it stayed above that. So that is very encouraging. So Thomas, I think, certainly right now it doesn't seem like Bitcoin is the digital gold because it's not acting as a store of value. But in the price action, yes, maybe this is just a little overdone. So what I think for you here is over the weekend is you need to pray for a green candle.
Yeah, and I just want to again, I want to emphasize, there's no reason to panic today.
Right.
Okay, we want to be
Pointed
honest
out.
with you guys. We want to say, hey, look for this. This could be problematic.
Yeah.
And let's see how it shakes out over the next few weeks. But as of today, I'm still okay with my position. I'm holding. We'll see what happens. The other reason, John, I pointed out the 101, 100, 102 level. Not only is that the 50-week moving average, but 100,000 is a huge psychological level.
Yeah.
And it was hugely bullish on the way up. The problem is that goes both ways. It could be hugely problematic on the way down because
Right.
Bitcoin has been above it for so long, John. So keep an eye on that level, guys.
Again, you could dip below 100 and get into this mid 90,000 area, which is represented by these two red lines. But, I think what you're saying is the problematic part is that you could fall all the way back to where, this whole most recent up move, this cycle, you got to go back until about a year ago where we broke out above what was that 70,000-ish area. So, I mean, that could come into play if we got several weeks below the 200-day, or as you said, the 50-week moving average, or 100,000. Okay.
Exactly. All right. John, let's move to a stock, which I think if you look up a stock in the Encyclopedia Jekyll and Hyde, you're going to see a picture of PayPal, because it's just a very odd, to say the least, it's a very odd behaving stock. I thought it was breaking out earlier this month, John, and that was a total fake out. And then yesterday when we talked about it, I thought it was completely breaking down.
Yeah.
And that's looking like it might be a fake out. So, John, what the heck is going on with PayPal?
Yeah. So, what I've talked about, and we did a webinar a couple of weeks ago. One of my favorite screeners is called the End of the Road screener, which is basically it identifies, uptrends that end abruptly. And, you want to see a gap of like 2% or greater, and then, fall through some critical or traditional levels of moving averages, 50-day, 200-day, 20-day, and so in that case. So this was the one that was on my radar because this was an end of the road gap. Now, this is more of a recovery uptrend because we were just, getting back to the 200-day moving average, and, a breakout above the 200-day should be a positive thing. And the fact that it fell back below that put it on my radar. But, a lot of times what happens in these end of the roads is that you get the initial flush down, and then you get a kind of a sideways, and then it finds a support, and then it tries to recapture the 50-day moving average or whatever moving average that it gapped down through, in this case, the 50. And you can see that's exactly what we did here. Notice how, very, very clean gap up above that gap down. But this is actually a shorting opportunity, because when you come back and try to fill this gap, this end of the gap, this is a great trade. And so this was something that I've looked at and I've been waiting for. And so I took this trade. But during this time of waiting for this happen, there was a lot of these, this cross currents of news stories. First of all, this all move was based on the idea that Bitcoin was starting to use crypto as payments. But at the same time, we got a lot of stories out of the buy now, pay later group of stocks who are telling us that their delinquencies were up, and that when we did that research a couple of weeks ago about government shutdown, we learned also that in this space, the buy now, pay later, 25% of those folks are using, 95% of them are using it for necessities, living day to day, paycheck to paycheck, and not what buy now, pay later was based for, is appliances. So this was kind of adding to my bearishness of what I thought in the gap fill. So then I got there was an unusual options trade on the 56 puts that will expire, I believe, at the end of this month, October. and they were cheap. I think they were only like 40 cents. So I joined that trade. But then again, like we said yesterday, when we broke down below, the 68.80, I added to my position by taking on a put spread where I bought the 67.5 put, and I sold the 55 put, in the idea that we were going to fall quickly through this. Now, my first target would have been the $62 gap, but again, I feel like this stock is still in a range, broken out of a range, and that it's more comfortable range. Looks like it's back down, down in this area. So, yeah, but what happened today? Again, volatility, right? Was this a liquidity trap, right? Did it just suck in a lot of new shorts? Did it suck me in? Yeah, it's probably maybe is exactly what's happened. But when you take a trades like these, when you set trades up for these like this, it's important you have a game plan. And my game plan says here is I'm going to stay with this trade, right? I have until the end of October, and the put spread I have until the November expiration. But my risk to me is what? The 50-day moving average. And if we get a close above the 50-day moving average, well, so be it. Then I'm wrong. But notice that the price action, all of this price action has been below the 50-day moving average and also below the 200-day moving average. And Thomas, what happens below the 200-day moving average?
I heard, John, this is just a rumor, just hearsay, but I heard nothing good happens below the 200-day moving average.
Nothing good happens below the 200-day moving average, exactly. Except unless you're short.
There you go. All right, John. So this has kind of been a bearish show so far, right?
Yes.
We talked about, well, what if the S&P falls? What if Bitcoin is over? What if these bubbles are – what if? Well, let's give people some bullish hopes, maybe a bullish idea, John. You found one. I like it. People talk about it. What have you got for us?
Yeah, so this is Archer's Daniel Midland. And the thought on this one, the thought process as a trader became from, market rotation, right? We've talked about this again in the past. And, if we're in a bull market, which we obviously are, what sectors we think could be the ones that outperform, and you can see the ones that are here are the ones that have been outperforming. And as you get to a market top, which sectors to look for. And so, basics, materials, energies, and stable. So that was kind of my theme. And the other thing that I was thinking was that the dollar, right, a weakening dollar is good for all commodities. And then I was saying not only for the precious metals, but also for the ags. But unfortunately, China didn't play fair, right? And China hasn't bought any soybeans since the beginning of the year. So the ag market has been under pressure. But Archer Daniels is in the consumer staples sector. And if you go and look at this from a performance basis, again, let's look at this from, let's say, from 3 months, right? There is Bunch, which is an ag producer as well. This is Lamb Weston's, which is basically French fries, a Monster Beverage. And there, again, there's our Archer Daniels Midland. So even though I didn't get the ag response, this stock has done well, right? And you can see this from this chart. Now, this is a Heikin-Ashi chart. And on top of the Heikin-Ashi, we also have the trend seeker, which is represented by these dots, these green dots. So we have been in an uptrend since about where I got into the stock, which was probably around here, around $52. And then we had been in a hold pattern for quite a period of time here, but we did get a little bit of a breakout this week on this news story. I don't know if you saw this, but President Trump tweeted something about, banning cooking oil from China and this whole trade China thing. And this is an article that actually came out in Barron's today, which is kind of funny. Thomas and I were laughing. It's like they were listening into our conversation last night. But one of the stocks that they recognize is Archer Daniels Midland. So, again, I'm already in this trade, and I'm probably going to add to this position. I want to see us get above, let's say this area of resistance. And certainly the way I use this template, by the way, which is also found on our bar chart templates here down at the bottom, which is called our long-term stop template. If I could get a close above this turtle channel, then I'm probably going to add to this trade because, as you pointed out when we did this discussion, is that you believe, from what I've taught you, is that if we do get above here, well, what do we have? Let's look at a clean chart here. We have a little bit of a potential gap fill on this one, up around $68. So up there, that's probably what I would cha-ching ring the register.
John, I heard you like gap fill trades. Is that
I
really
do
correct?
love gap fill trades.
All right. Beautiful timing, John. Right on the money.
Thank you.
That wraps up our main talking points, guys. Again, if you guys are watching on our social channels, John and I would be very grateful if you want to share it, retweet it, leave a comment, give it a like if you're watching on YouTube. We love seeing your feedback. We love seeing your comments. It helps us plan for future shows. So please go ahead and do that if you get an opportunity. John, are you ready for some questions?
I think I'm ready for some questions. Why don't we go ahead and give that a shot?
So let's start with an observation here. This is about our Bitcoin segment. Losing the 50-week would most likely signal the end of the cycle, which is weird since we haven't had the euphoria state and the market is on extreme fear. Bear markets don't start on extreme fear. Yeah, I mean, I agree to some extent. I mean, we've talked about sort of that mania phase, right, John? Sort of the whole blow off top idea that has happened in past cycles. The one thing, John, that gives me some pause is the monetary environment has not been as favorable this time as it has been in past cycles, right? We've got high interest rates. We've got a Fed that's kind of holding the line, cutting very slowly. They still haven't ended quantitative tightening, although Powell did signal that could be coming to an end. That's a positive. But we're also running out of time in the 4-year cycle, so I'm concerned about that. Again, how do you get altcoin season? You need Bitcoin to go up, gives the market confidence. You need Ethereum to get back to all-time highs and hold it for longer than an hour. And then after those two things are in place, potentially you get the altcoin season. So you need each of those two things to happen first, guys. Okay, how about MP stock? I don't know if you look at MP stock, John, but I pulled it up. It's a rare earths stock.
Yeah, it's in that category. I do have a watch list, so let me see if I pull it. Go ahead. What's the question?
Well, the question is, can you analyze MP, or if you have thoughts on rare earths as a sector, what do you think about it?
All right. Let me see if I can shut some of these windows. So my internet has been super slow today. I don't know what is going on here, but let's see. All right. There we go. Yeah, I apologize. My internet is really slow today, so I'm gonna have to take a pass on that until, let's say, I'm trying to pull it up, see what we can do for you, but right now it feels like I'm kind of stuck in the mud.
You know, I will say, John, I looked at MP. It does have a strong buy from the bar chart technical opinion.
Right.
And again, that's a useful resource, guys, for any of you who want to check on any particular stock. Just give that a look and a glance and see what the bar chart opinion is.
Okay. All right. What's another question? Let's see if I can get my internet to work.
Let's see what we've got. Is gold going to have a correction? Well, that's the $1 million question, John. That is the $1 million question.
What did it do today? I mean, I saw silver was down like 5 or 6%, right?
Yep. Gold started off strong in the morning, and then it reversed seemingly with the stock, right? They went opposite directions. Stocks went up and then gold came back down. But there's
something else going on with gold besides which is obviously in front of us. It certainly is not. It's not acting normal in terms of a technical and analysis aspect, but there might be some outside forces But yeah, I mean, I feel like it's overdue for some type of a correction, but I'm not going to step in that play. All right, I got MP up. Let's do this.
All right, let me pull the screen up. Yep, there we
Okay,
go.
so I mean, look at from a trends aspect, the ADX is it's still above 25, which is a good sign, and not, it is losing momentum. I mean, again, you got this kind of this divergence away from your moving average, right? But it's still, they're still up sloping. You're kind of holding that value. What I'd be concerned about is if the negative DX crosses above 20 and the positive DX falls below 25. What's the weekly look? I'm sure the weekly is very strong. Again, is there room for this market to have a bit of a correction? And certainly we've seen that in all the markets that have this kind of this bubbleistic characteristic. So I still think, trend wise, it still looks good. The problem is that what has happened? It's deviated, it's gotten too far away from its mean, and now it looks like it's having, your classical mean reversion, right? And so, that if you were long this, you really would like to see it to hold this 76.39, but don't be surprised in these kind of stocks that go way outside the Bollinger Band like this, and then it snaps back to the mean. Well, many times it will go outside the band and then go to the lower band, which would put it down around 58.70. So let me just look at this in the case of our weekly. Whoop, there you go. So there would be where if I was looking at this stock and I wanted that bubblishness to be out of it, there would be the mean reversion entry point that I'd be looking for. And that would be at the weekly level.
We got a question on small caps, John. Roberto says he's been watching a few small caps, and he noticed that each of them have a really small number of employees. Does that factor at all into your analysis, John?
That's what is the definition of a small cap, right? I mean,
he said that, for example, one only has 5 employees. So is there a number that's just too low and too sort of risky?
I think it's more about market capitalization, revenues, and expenditures, right? And probably the space that they're in. So no, I don't look at how many employees a company has to, right?
Yeah, I mean, I tend to agree. I mean, I look at the price action, right? I look at strength of fundamentals. The only thing I will say, though, is if a company only has a few employees, then I think the idiosyncratic risk of potential business failure, right? The potential for becoming a going concern, I think it's probably a bit higher, John, relative to a company like Microsoft, right? Of course, the company with only a few employees is going to be a bit more nerve-wracking.
Yeah, but how much? You look at. I mean, again, I'm going to play devil's advocate here. You look at OpenAI when it first started. I think it was 8 guys, right? I mean, now it's the most expensive private company in the world, right? Its valuation is like $500 billion or something like that. So, I mean,
high risk, high reward, right?
There you go.
All right, let's see what else we've got here. John, any thoughts on Nat Gas? Is it time to catch the falling knife?
It's like we get this every week. Nat gas. Again, we're kind of in this neutral area between two seasons. We need some weather to drive the market. There are some concerns of recessionary concerns, right? That we talked about how crude oil is kind of the canary in the coal mine on identifying recessions, but natural gas is also very recessionary sensitive. And you can see that here that we are making a new low. I said to you that multiple times that around this 290, 285 level is where we really kind of need the market to hold. And then there was the other idea that when we start looking at natural gas, if you're looking for the catalyst that could be outside of here in the U.S. in terms of weather, is look under the European energy futures and look at this Dutch TTF. This is the natural gas contract, the liquid natural gas, the LNG. And this will be your catalyst to look for when natural gas prices should rally. Now, last couple of weeks ago, it did have a feeling like it was going to break out above $34. But it's kind of been range bound. Again, it's just kind of the season right now. So for my natural gas traders out there, is patience, grasshoppers, patience. It's going to come.
This next question, boy, this brings back memories, John. So here's a question. Over the last week, some prognosticators have said that the Hindenburg omen, remember the Hindenburg omen, John?
Yeah.
Is close to triggering. If it does trigger, John, what would you do? Would you be scared, or would you make any moves? Or
well, I think the Hindenburg omen would be more of a confirmation of the things that we're what we're already observing. And again, I don't remember all the component of it, but I think it's based on a number of new 52-week highs versus new 52-week lows, right? And then there's some kind of a percentage, and then when you have more lows in a short period of time, and in one event, which was the event on Friday, and then if you have it again, then that is the signal. So to me, the Hindenburg omen is more about this classical idea of change of character and trend, and that would be more stocks are exhibiting lower lows versus where we are at all-time highs, where we have stocks that are still making higher highs. So that would be how I would interpret it. Yes. Did that make sense? I don't know. I didn't
absolutely. And then, guys, if you've never heard of the Hindenburg omen, or if you just want a refresher, we do have a short video that we clipped out from our longer show on the Hindenburg omen. You can find that on our YouTube channel.
Okay, cool. I know we went into depth in a bit. So
yeah.
But again, looking at it right now, I don't see anything that would be outside of it. And again, this also goes in those 9-to-1 down days and 10-to-1 up days, and all of them together kind of just add up to this change in character.
John, any thoughts on Intel?
Again, another one of these stocks that is involved with the government, and my inclination is that I don't want to be on the opposite side of the government, So, I don't really have any feeling one way or the other. Oops. Wrong symbol, John. There we go. Let's look at this. Let's do this. Let's start from a clean sheet. Right? Very strong recovery off of a nice bottom. But what's the overall big picture trend? Certainly feels like still more of a series of lower lows and lower highs on the weekly level, right? When in doubt, zoom out. We're getting close to a lot of areas of gaps and resistance. So I'd be a little bit reluctant here. A bit of a rollover. Feels like a little bit of a rollover here. Again, from our Bollinger Bands, I bet you this is going to be outside the band and is setting up for a band mean reversion. And there you go, right there. So, kind of a neutral stance here. I would say if you're long hold, if you're looking for an opportunity to sell this, you got to wait a little bit. And if you want to buy it, well, you probably want to look for some type of a market correction.
John, we got a question. They want to know how to find your end of the road screener.
Very good. Excellent. Somebody is interested. All right. Investing ideas, bar chart screener. And there it is. Now, I don't think it had any candidates in. This is what I love about this one, right? It's not like it gives you a lot of candidates. Oh, there are two here. Oh, Red Cat. Oh, a stock that I own. Thanks a lot, buddy. So this would be a classical. So and we'd have to worry about this one if we broke. All right, so you broke through the 20, so it should fall to the 50. That's would be the trade, which is interesting though. You want to talk about an end of road trader? We did the segment on PayPal, and the other one that's in that same space is a firm, right? That's another buy now, pay later stocks, and look, it had an end of the road gap, but notice the big difference here than from PayPal is it fell through the 50 and never got back, and then you got the 20-day crossover from the 50-day crossover, right? So it feels like this is making a race towards the 200 days, and that's really kind of thing I think is going to help reinforce my PayPal trade. Hopefully, we'll see.
John, I don't understand this next question, but hopefully you do. Why look at a 50-day moving average when the Fibonacci number is 55?
I do look at that sometimes. It's just classical. It's Sun Tzu, right? If you understand the tactics of your enemy, then you can use that against them. And so the 50-day moving average is just a classical moving average that folks use. And I do know folks that do use moving averages that correspond with Fibonacci numbers. And at lower time frames, I will look at, let's say, the 13, right? If you look at one of my templates that we have that I've created for our viewers, our pivots, we use a 13 EMA. So yes, I think you can use them, but I think it's more about just looking to see what everybody else is looking at and using that to your advantage.
All right, we got 2 questions left, and that's we're going to lock that in, guys. Those are going to be the last 2 for today. John, first one is, are central government banks printing fiat to buy gold, a return to gold standard? Do you believe that?
I mean, yeah, there's debasing theory. I don't think it's not just the dollar. I think it's all the major currencies, right? And I think this is just if you look at like the last bubbles, right? You go look at the .com bubble, that was corporate balance sheets that had gotten out of whack. You look at the great financial bubble or crash, that was the individual, right? Real estate, their balance sheets got out of whack, and now I think the reckoning is governments and sovereign states. Their balance sheets need to be rectified, and so I think this is probably the bigger theme that is behind the whole precious metal gold rally. So
yeah, I mean,
relate to that.
I mean, yeah, people they're scratching their head trying to figure out, well, what's causing this massive, just incredible bullish move in gold. There's a bunch of different theories out there. This could be, who knows?
Right. I mean, if you have lost faith in the whole idea of governments and their currencies, well, what are you going to do? You're going to spend those currencies, those dollars, as fast as you can, and you're going to buy hard assets, right? And so, what's the hardest of all assets? Although gold is soft, it's precious metals, gold, safe haven, right?
Exactly.
But it's real estate too. It's all kinds of things like that. Stock market, right? Stock market, all-time highs.
All right, last one for the day, John. VWAP. How do you use VWAP? Is that something you use on a regular basis?
I don't use it on a regular basis. I do have a couple of webinars on that one, so I would recommend going into our Learn archive and let's see if I type it up, it'll come up. I'm more of a volume profile and a market profile guy when I'm doing that kind of stuff. I feel that the VWAP is probably better for a day trader. And there you go, Day Trader's Guide to VWAP. There it is. But there's also one here on using the Anchor VWAP to help you with your swing trading. So look at those 2 ones. But again, I feel that it's more of a day trader's tool than it is more of a swing trader's tool.
I just saw this comment come in, John. Silver is going to 100 prediction. This is interesting because I just saw a couple of days ago, BNP Paribas, analysts from that bank say that silver will hit 100 by the end of next year.
Well, I know there's a lot of other weirdness going in there. For instance, like the LME and the London Metal Exchange. Supposedly, the rumor is that they have no silver left in their inventory. I mean, again, we've got gold bugs and we got silver bugs, and so they're going to say whatever they want to kind of drive the market.
If silver goes to 100, John, I'm going to be concerned about other stuff going on.
Yeah, well, there's also that gold silver ratio, right? I think. Let me see. Hang on, real quick. A little bonus here. My charts. I haven't looked at this one in a while. There we go. I'm surprised that it's only at 80, but if you think about that, if it stays in this range at $100 silver and an 85 gold to silver ratio, what does that put the price of gold? 85 times 100.
It's pretty high.
That'd be $8,500 for gold,
that's pretty
right?
high. That's pretty high.
Right.
That
If it fell to the low end, and let's say gold goes to 5,000, let's say 75 ratio, it still only puts silver at around $66, $67, right? So,
8,500 seems inconceivable to me anytime soon, John, but who knows?
yeah, but when the gold was trading 2,500 just a few months ago, it seemed, 4,000 seemed inconceivable too, and here we are, right?
I just saw the gold as an asset class hit $30 trillion this week, John. So if it gets to 8,500, you're looking at an asset class worth more than 60 trillion.
Wow.
That would be
more than all the economies on the country, probably, without maybe U.S. and China, right?
Well, I think it would be housing, number one, right? I think housing is worth maybe about 100 trillion, and then you would have gold at 60 trillion. Just incredible.
All right, let's leave it at that. Food for thought. All right, folks. Thank you so much. I hope you enjoyed today's show. We try to bring you guys some alpha, and I think there was a lot of alpha today. Remember, all of these are just for educational purposes and are not recommendations. Until next time, the best of health, manage your risk, and the good of all trading.